Hey guys, Don Durrett, Gold Stock Data. I updated my optionality list today. You can see down here the tabs. I started doing this in 23, and now that we're getting towards the end, I did one in January and I'm doing it in March. I think I don't know how much more time we have. 1, 2, 3, 4 more months before all these stocks basically double in market cap. Maybe not all of them, but the majority of them. Um, I'm going to do them in alphabetical order. I'm only going to do the ones that are highlighted in green, which are the ones I like, because there's too many, 58 names. 58's too many to do in an hour. That would be less than a minute per stock. There's probably a couple stocks I want to do more than a minute on, and I have to do this intro, which takes a few minutes. Um, Not everybody has seen this chart before, so they might not understand it. So I have to explain it. So the category, dev is developer, PG's project generator, which is an explorer, MT's mid-tier, and SB producers. There's very few producers on this list. They're um, the majority are developers. Then we have the type, silver, or gold. And then we have the GSD rating 43B. So the first one is the upside rating. A 4 means it's a possible 10 bagger. 3, 5 means likely 5. And 3 means possible 5. Then the second one is the downside rating. You want it to be as high as it can be. Uh, it's very rare to see a 4 on downside. You see some 3, 5s, but 3 is very good. You really don't want 2.5, which is marginal. Ideally, you want this to be a 3, and ideally, you want this to be a 3, 5, or a 4. Um, and then I don't have my website, they're color coded if they're top picks. I don't have these marked if they're top picks or not. Um, B is a kind of borderline good. It is the grading scale A through F, but B's okay. B minus is marginal. So you ideally you want B plus, A minus, or A, but B's definitely acceptable. So here we have an A minus. So B plus, A minus, A is what you want. B is okay, and then B minus is when you start to get more risk involved, and then C plus and very marginal, and C's not so good. And this third rating, it's used in tandem with the downside rating, not with the upside. The upside rating is just pure upside. The downside is your risk reward. And then I've added this third one for kind of the quality of the risk reward, because what you'll see a lot of them that have like 2, 5s or 3s. A good one, exactly, 3s. We have a 3A minus, we got a 3B, we got a 3B minus. So it gives you a little extra um, data on that number. So it was basically a 3 scale rating. Okay, this one is the current market cap in millions. So aftermath 133, and then we have the current ounces in millions 200, and then the future ounces. Sometimes I have the future ounces higher, sometimes I have them lower, depending on, this is my personal estimate. And these numbers, a lot of times I'll round them. Sometimes I'll use silver equivalent depending on the economics. Sometimes I won't. But these are basically my numbers. You need to validate them yourself. You might think like Argent, you're like, Don, they're going to grow. It's 90's too low. And so you do your own analysis. So here I have Argenta growing, and then I have Avino. I'm not giving them full credit. I'm only giving them 300. So again, these are my opinions. Then this column here is used to calculate the current. So if we come here and we look at the calculations, it's E, the market cap, and G. So instead of using the current, I'm using what my estimated. So it's E times G is um, the current, what I consider the current value. So I'm not giving them like Avino, for instance, I'm not giving them full credit for 350. I'm only giving them 300, which is 69 cents an ounce at the current market cap 208. Um, so silver, anything that's 50 cents, around 50 cents or less, is very cheap. And then 25 is super cheap, and $1 is kind of very marginal. So if we only look at the silver miners, there's nothing that's a dollar. So we got some 60s. So 60s as high as I went. I'm basically removed anything that's bigger. But we see we have a lot that are right around 15 to 25 cents, which is very cheap. And then if we look at gold, we're not going to see anything that's 50. So anything that's $50 or less is fairly cheap for gold in the ground, especially if it's a developer. Developer less than 50 is kind of a cutoff for me for cheap, if it's cheap. So we're seeing quite a few here. So we have gold, and I only want to do developers. So we do gold developers. We're doing right here, this line, excuse me. Everything is under $50, which is, these are really, really cheap. I mean, look at $10 in the ground. These are developers, by the way, not explorers. It's kind of crazy how cheap they are. 27 is kind of as high as I go. So you can see, now if we look at all gold, bring in the producers and the explorers both. So this is just gold in the ground, current value. You can see they're all somewhere between 5 and 25, which is extremely cheap. I mean, you can buy gold in the ground for $8, like Banyan here. We'll talk about that when we get to it. So I think now we can start. I can do gold and silver. So this is current value in the ground, my estimated current value in the ground, and then this is the estimated future market cap. This is what I'm going to use per ounce in the ground. So if we go up, we'll go up to the very top. I'm using $5 for Aftermath. The reason why I'm using $5 is because I expect them to get into production. So if they get into production, it's really, is it going to revalue higher? So as long if they get into production, I'm saying that they're probably a minimum of a five bagger, and it could be higher, but that's just kind of a. Then I'm taking 25% dilution. So this is the current one, the current upside or the current JKL. So I'm doing it at 25% dilution and then 50% dilution. And then I'm using this column. So these two columns, the reason why I'm highlighting them is because we want to see, in this column, we want to see right around $20, somewhere around there or less for like a really cheap stock. And then over here, we want to see somewhere around 400, 500%. The ones that are 300 are kind of marginal. And then we have to look at these stocks. We have to decide, are they going to dilute us more than 25%? If you think they're going to dilute you more than 50%, which some of these developers will, depending on the CapEx, then you have to look at this column instead. So this is kind of like Aftermath. They very well could dilute us 50%. It's possible, depending on what the CapEx is. It all depends on the financing. So we're going to get a three bagger, but if we're confident they're going to take it to first pour, then the optionality is pretty darn good. I mean, you're getting minimum of three baggers, what the estimates are saying. And oh, this is the valuation without dilution. So it's basically a five bagger, 200 million, or excuse me, 133. It looks like I deleted a column here. IGKLM. Um, this actually is wrong. It should be percentage. I'm not sure why I have that there. He's basically saying $1 billion without any dilution, it's going to be worth $1 billion. I guess I'm probably using the J column. Yeah, I'm using the J column. That's why it's there. This the possibility of no dilution is very low. So this column is kind of it doesn't really have a lot of meaning. We got to add some dilution. So that's what that is. Okay. Now we can start talking about companies. Over here, I have this notes, so you can read that. You can do screenshots. So we start with Aftermath. Um, I'm I'm getting more excited about Aftermath because I do think I was nervous that they would sell this project, and now I'm becoming less nervous. I'm becoming more bullish. Got a couple of emails from the CEO last week, and I'm starting to get the vibe from him that they realize that the value here is taking this thing to production. What's amazing on a lot of these development projects is the boards, they don't think like a shareholder because there's a wide gap between the valuation of a company if they sell it before first pour or if they take it to production. Um, there's a big gap there. You're going to make so much more money if you take a project to production and it gets revalued higher. Um, Especially if, for instance, Aftermath, like right here, I have them valued at $5. They could easily go to 10 if they get it into production and they have a really and they ramp up strongly and everything goes well. And instead of being, you know, optimistic that you can pull it off kind of attitude, we can do this, we can build it, we can make money. A lot of these companies are it's it's much easier just to sell this thing, right? The easy road, the easy path. And you have to find a board that's more aggressive that wants to really benefit. And they'll say when they sell early, they'll say that this is for the shareholders' benefit. That's total BS. The benefit is for them. It takes all the stress off them. They get a check, they walk away. It's really stress reduction on their end, not shareholder value. Now, some of these development projects, if they do a merger of equals or they do a merger with a company that's also highly undervalued, then that might work. But normally that's not how it works. Normally they will sell to a much larger company, and so your upside gets moved to that other company, but they benefit, but they don't benefit nearly as much as we would if it went on their own. So Aftermath, so they have 130 million ounces, but I have a 200. But Gala is 130, but they have a lot of manganese, so they might sell that other 80 million ounce project, but they might build it, they might drill it. But their manganese makes it a very low cost silver mine. So we haven't gotten one red flag on there. We don't have a path to production yet. I think we don't even have a PEA. A PEA is going to come out soon. And then we got to get an idea on permits, how many years it's going to take. So a lot of these development projects are long life. Argenta is a relatively new company. They acquired the project from Golden Minerals down in El Cuvar, down in Argentina, which currently 48 million. I think it's going to 68. I don't think they're going to sell this thing. So I like it. I think that this is a $34 million market cap. This one could easily go 50, 75 in a heartbeat once you get silver to like 36, 37, 38. This stock could easily double really quickly as people start looking around for, what are the cheap stocks. Avino, this has always been, probably the cheapest producer. So it's a mid-tier producer, and it's on my optionality list. And I'm only giving him credit for 300 million ounces. And at 300, they're valued at 70 cents. At $5, hopefully they don't sell this thing, but just on optionality alone, I think it's worth $5, but I don't think they would sell for that. Um, so I should have on the chart what it's currently valued at. Well, I have it at 69 cents. Yeah, so they could, in theory, I mean, they could sell this thing for $1.50. I mean, they could give this thing away. They wouldn't sell. Well, I think they would. Yeah, if they did a merger, it would be a sell. So that's the risk with Avino, but they're sitting on a lot of silver equivalent. Banyan, 8 million ounces, only giving credit for seven, and it's still printing at $8 an ounce in the ground. What are the odds they sell this thing less than 50? So, it's sitting at 25% dilution, we think is good. It's sitting at an eight bagger at $100 gold. Um, so the chances are pretty good you're going to get 3, 4, 5 bagger out of Banyan. Plus, it's probably growing. Like I only have it at seven, but they think it's going to grow to 10 or 12. So my seven number here is probably too conservative. Um, but yeah, I like Banyan a lot. Bear Creek, problem with Bear Creek is they're starting to get a little antsy. They just announced this week that they were going to do um, bring in some consultant to look at options. Uh, and the best option I think they have is to merge with Avino. Do a merger of equals with Avino would just be a beautiful thing. It would be awesome. Um, so that would be the ideal thing. They need to do a merger of equals, or if they are going to sell, they need to make sure they sell to a company that's very cheap. Um, you know, so we'll see what happens. But their Karani project's one of the larger undeveloped silver projects, and it's construction ready. All they need is a loan to build this thing. 275 million ounce silver equivalent project. That's big, trading at 22 cents an ounce. But it hasn't worked out for people that have bought this thing because they keep diluting us into the ground, and now they're doing another dilution. So, it's currently valued at 55 million. You know, uh, but they're diluting us. So that you know, I, I'm starting to get nervous just because they just announced this strategic look at their companies. So it's not a slam dunk. I do have it as green. I like the Karani project, but I want to own it, but I don't know who's going to buy it. I'm just hoping that whoever buys it, I own it. Chesapeake is a long term. I don't think we're going to get a DFS until 27. This thing probably not going to go into production until 29, 30. So it's a long way out there. But you're paying $5 an ounce in the ground. I mean, that's pretty cheap. If you don't mind the long-term wait, they do have strong insiders. It's a very cheap stock. Not only does it have 13 million ounces of gold, but it also has 500 million ounces of silver, which I think they're going to sell that as a stream. The majority of the silver they'll sell as a stream to make it a low-cost gold mine. El Oro, this is mainly a tin mine. This is silver equivalent, 250 million. I think the silver, um, they have 300 million ounces of silver at 15 grams. That's probably 50% recovery, which is probably about 150 million ounces of silver. So they have 1 billion ounces of silver equivalent, and I'm only giving them value for a quarter of that. So it's basically a tin mine, but that silver is going to make it a low cost tin mine. But tin is actually becoming a fairly rare thing. There's not a lot of tin mines in the world. So I like it. Falco, Falco is kind of a slow progress project. But you're paying $9 in the ground for 5 million ounces. It's in a good location. Will get built, but it's going to take some time. It's another long-termer. Free Gold Ventures, paying $10 an ounce. However, at 30, you're paying 10, so 305 million. Um, I don't think this thing gets sold for less than 80. And it probably won't get sold for less than 100. There's two private investor groups, including Eric Sprott, who owns 29%, that own over 50%. So there's no way this thing gets sold without those two groups greenlighting and the sell. And I don't think they will sell for less than 80. So It really does have, this is with 25% dilution, which I think is right. I think this thing's a five bagger all day long. Getchell's in Nevada, paying $13 in the ground, which is pretty cheap. I don't think they'll sell for less than 50, but I don't know how much patience they have. But it's a fairly advanced project in Nevada. It's very cheap. Getchell and Lahontan are my two. Optionality plays really cheap. Getchell's 13, Lahontan's like $3. Gold Shore, 6 million ounces of gold in a good location. This thing will get sold. Oh no, actually they're going to try to build it. I've always worried about permitting for Gold Shore because there's a lot of water on their property, and water to me is always risky for permitting. And so, people, there's definitely going to probably be some lawsuits. All you need is one judge is, economic friendly, can hold this thing up. So that always bothers me, but I do own it because it's just cheap. I mean, you're paying $12 an ounce in the ground. I mean, you're not, when we finally turn and these projects start getting valued at what they should be valued at, I mean, think about how much money has been spent to get to 6 million ounces. It's a heck of a lot more than $12 an ounce. So they're basically being priced well below their market value. I think these developers should all be valued at least $35, and it's at 12. It's not even half what it should be at. So at a certain point, these stocks are going to double, triple. So um, Grand Portage, I don't have a green. Interesting stock, $8 an ounce in the ground. I sent them an email, sent them a follow-up, and they haven't replied. Very frustrating. I wanted to talk to their CEO about, I want to see if they have a path to production. Eric Sprott does own some shares. I don't own it, don't have it green, but I find it very interesting. 2 million ounce high grade project at $8 an ounce in the ground. It's definitely interesting. Highcroft, I don't know how much it's going to cost to build Highcroft. Um, what's the capex? We know they have gold, 15 million ounces of gold plus a lot of silver. As a matter of fact, they're probably going to start this thing as a silver mine because they have some high grade silver. They don't have any high grade gold. Um, I I don't know how long it's going to take them to permit. This is a past producing mine, so that shouldn't be a problem. But they have to build a mill, which is going to take at least a year. We don't have a PEA, DFS. It's all in the dark, but you're paying $5 an ounce in the ground. I'm just thinking once we get to $3,500 gold, I gotta believe they can make money. Well, 3,000, it's evident they can't. They're not even looking at their gold we're at $2,900 gold and they're still not even looking at it. But once we get to 3,500, I think we're going to hear more out of Hycroft. International Tower Hill, big fan of this one. Uh, I'm valuing it at 10 million ounces. They have 13 million ounces of gold in a good location in Alaska. I'm valuing it at 10. At 10, you're paying $12 an ounce. I think this could easily be popped to 200 because they're not selling. They're building this thing. But so I'm only doing 150. I'm just showing you just as optionality as a sell, it's printed as an eight bagger. So I I like the insiders on International Tower. I like the size of the project. I like the location, kind of like everything about it. Kootenay, the issue with Kootenay is that they're drilling out this Columba project. We don't know how big Columba is going to be. This 350 million is like three or four of their projects. Columba, I'm only valuing them at 250 and we're paying 25 cents in the ground. I think Kootenai is really under the radar here because once silver gets to $40, their low grade projects are going to get revalued. Plus, Columbus growing in size. I think Kootenai is really under the radar with a 61 million valuation. Lahontan, I mentioned this one. We're paying $4 in the ground, 1.9 million ounces. It might grow a little bit. We're paying 350 in the ground. Can't beat that with a stick. I mean, it's in Nevada in a good location, open pit project, economic. Victor, the reason why it got so cheap down here at $3 an ounce in the ground is Victoria owned like 25% of the shares and they had to dump them all because they went bankrupt. And that dumping process put downward pressure on Lahontan and it never bounced. It never came back. Moranen, this is a silver project in New Zealand, but it's project generator exploration, but it's a lot. Silver equivalent, low grade, 200 million. Nobody wants to touch it, valued at 21 cents. I like it. I could talk about Newfound Gold and New Pacific. I will real quickly. We'll make this is gonna be a long video. Newfound Gold. Everybody's saying it's a nuggety project, and it's gonna be difficult to mine. But some of the drill holes have been just outstanding. I mean, just super high grade. So the way that I look at it is all they need to do is find a way to mine 100,000 ounces, and they're off to the races basically. They need a starter mine with that kind of grade. I mean, a 300 ton per day mine, and you're easily at 100 grand and 100,000 ounces a year. Once they get into 100,000 ounces, they can start drilling the heck out of their property. I think it easily has 15 million ounces. I don't know if they'll be able to mine all 15, but at 15, we're paying $25 an ounce in the ground. This one's one of those ones, probably 50% dilution. So because it's going to take them a while to build it. Yeah, I think 50% dilution all day long. So it's not with 50% dilution, it only prints as a two bagger. But that has optionality where if they sold it, but if they build this thing, you're really looking at 250. But then we have all the dilution. But um, I, I you know I'm a little nervous about this whole so-called nuggety effect, but on the whole, I don't have it green, right? So I'm nervous about it. That's why. But I do own it. New Pacific, I do own it as well. I haven't talked about the ones I own. I said I didn't own Grand Portage, but everything in green, I think I own. Um, New Pacific, the problem with New Pacific is Silvercorp. I just think Silvercorp is going to buy this thing. So, but if you own New Pacific, you want to also own Silvercorp. You always want to own the buyer. That's why if you own Cabral, you want to own Gold Mining Ventures. Next Gold. This one I think is a slam dunk. 5 million ounces, really solid path to production in Canada. Nova Minerals. This I have this green and I own it, but this one makes me nervous. The reason why I like it, they have 8 million ounces of gold, but I'm only giving them credit for five. You're paying $12 in the ground. Um, the issue with Nova for me is I have management here as a question mark. I'm not sure if they can build this into a large company. Um, they need to, get going. It's it, they just had a lot of slow progress, and so, but I mean, when you're paying $60 million for 8 million ounces of gold, I mean, in Alaska in a good location, it's tough to turn that one down. So that's one I'm going to bet on management. Paramount, Nevada. This one here is all about sleeper. So they have a 1 million ounce project, Grassy Mountain, and we're paying $26 million. I mean, the Grassy Mountain project alone is easily worth 5x that. And we're getting Sleeper on top of it. I think Sleeper's easily another 2 million ounces. So we're paying $9 in the ground. They're probably going to JV Sleeper. Um, Paramount, it's not a slam dunk. It's not, I have it as, you can tell, I have these as two fives. Remember earlier said we want to see threes. That downside target, I have two fives on both of these. When you see two fives, that means I'm a little nervous. These so far, everything I've went through, these are the only green ones that are two five, so that's why. Revival is a 2.5, but I like it a lot. It could be a 3. The reason why it's not a 3 is because we got a ways to production. They still have to finance the mine, but it's really borderline. If I could, it would basically be a 2.8 here if I use those numbers, but I only use two fives and threes. But it's really, I like Revival a lot. They have three mines to build. They have plenty of gold. They have a good CEO. paying $12. I like that. I like that story quite a bit. Silver Storm, um, Silver Storm, you're paying 52 million for I think it's La Perilla that they bought from Silver First Majestic. But the reason why you own Silver Storm is because of San Diego. San Diego, it's in the same state in Mexico that they bought the mine that they're going to put into production this year. So we're getting San Diego for free, and so you got 150 million paying 35 cents an ounce. This is another one where I'm not super excited about the management team. They seem to be a little, not a lot of experience, if you will. And so we're betting there, but I think they're not going to have trouble making money on the mine they're going to put back into production. As long as silver gets above 35 this year, they should be okay. Then they can take that money and build San Diego. And so if I can pay 35 cents in the ground for San Diego, I'll take it. Silver Tiger, big fan of this one. Glenn Jessam, paying 60 cents in the ground, 91 million. They have 180 million silver equivalent. I'm only giving them credit for 150. Um, I they also have exploration potential. This is in northern Mexico. I think they're going to get their permit this year. I've always been a fan of that one. Silver X. Um, this one, they've been having trouble making money. They're down to 33 million, but they have a lot of silver equivalent. Given the value, you're paying 25 cents in the ground, but this company, they could dilute us a little bit more. Or they could go bankrupt. They're going to get healthy though, about 36 $36 silver. I think they're going to be healthy. Until then, we cross our fingers. Silver, this is a new company, Silver 47. They're around Red Mountain Mine, 200, 170 million. That's going to grow. I have a 200, you're paying 15 cents in the ground. I do not own this one. It is on my buy list though. Sonora Gold, they're want to, once they get their permit, um, they're going to permit this thing. I think it's going to grow from 500,000 to a million ounces. You're paying $17. Southern Silver, you're paying 16 cents right now on the ground for that. You can't beat that with a stick. Spanish Mountain, um, they're slow progress. Stellar, it's a long-term development project, but you're 18 million ounces at 15, you're paying $9 in the ground. I like that. Sun Silver, we got a lot of risk with Sun Silver. I want to see a path to production. I don't see it. So there's high risk here, paying 12 cents. But this is one they could easily sell. I don't know what's going to happen with Sun Silver. They have a new CEO right now. We'll see. Talisker, very slow, a small producer in Canada. It's a long-term bet. It's going to take them a while to build up their production. We're looking mainly a 3-year play. Teuton is they own 20% of Tudor. So Tudor and Teuton's basically the same bet. We just don't know when they're going to sell. And then Unico, we have 150 million. This one's kind of under the radar. I like that one a lot. Okay, guys, I gotta go. Stop recording.